Well, they say the most difficult job in British politics is standing up and giving a reply after the Chancellor sits down after his budget. And I think the second most difficult job in terms of doing anything is actually trying to give investors some idea of what the budget means shortly after the Chancellor has sat down. Now, Ed Miliband actually did a very, very good job today. Didn't have a lot to work with, but was very, very lively on his feet and certainly got some pressure on the opposition. So he started to have a healthy debate about the issues of higher rate taxation. Now, with regard to investments, it's a little bit more complex. If you look at the immediate response from the market, the interest rate started the day over 10 years about 2.45%, and they finished about 2.37, or they got to a bottom of 2.37 shortly after the Chancellor finished. So no issues from the market regarding what he said, and therefore it doesn't look like anybody's doubting the UK's ability to try and get, or its ability and determination to get this public sector borrowing requirement on a downward track. Equity markets didn't respond much to it either, but generally I think corporates would recognise it's good news that corporation taxes dropped down, and there has been something worrying us that all this cash accrued by British companies might be attacked eventually by the politicians. So far that's not happened. But there was one very, very interesting point that the Chancellor made in the budget today, and that was the reintroduction of a perpetual bond. Now, a perpetual bond is one that pays you a rate of interest but never promises to give your money back. And the last time the UK did this was around 1932 when it issued war stock 3.5%. You got 3.5% interest every year, but the government never paid you your money back. If you're unlucky enough to buy that, and of course no one watching this is likely to be old enough, you lost 60% over about, you lost 70% over about 60 years. So watch out, because the chances are the government only issues these perpetual bonds when it thinks interest rates are very low, and we're going to keep a very, very close eye on interest rates on UK bonds and gilts in the foreseeable future.